Welcome to the deep dive. It feels like every other headline is about cryptocurrency,
It really does.
whether it's, the latest price spike or some new digital asset making waves or maybe a tech breakthrough.
Right.
But beyond all that buzz, what's the actual data telling us? Where is this market really headed?
Yeah.
So today we're going to try and cut straight through that noise.
Precisely. And our mission for this deep dive is really to pull out the key insights from a very specific source.
Okay.
It's a market forecast report from Cognitive Market Research and gives this really detailed look at the global crypto market. Covers 2021 all the way to 2033.
Wow. Okay. Quite a span.
Yeah. So we want to give you a shortcut,
Okay.
to being properly well-informed and maybe uncover some surprising data-backed facts about where crypto's future is going.
And when we talk about future, I mean, the numbers in this report, they paint a picture of just extraordinary growth. Let's hit you with the big picture right away.
Let's do it.
So this report, it reveals the global crypto market generated nearly $1.9 billion in revenue back in 2021.
Almost 2 billion, yeah. A solid base.
A solid base, exactly. But here's where it gets really interesting. It's projected to jump to almost $2.8 billion by 2025.
Okay.
And then really explode to over $6.3 billion by 2033.
Wow. What's genuinely fascinating about those figures is that this represents a compound annual growth rate, or a CAGR.
Right, the CAGR.
Yeah, of 10.71%. Now, for those who may be unfamiliar, a CAGR basically smooths out the year-on-year growth, gives you a single rate.
Kind of an average over time.
Exactly. And a double-digit CAGR over a decade. That's a really powerful indicator of rapid, sustained expansion.
So if we connect this to the bigger picture, it means the market's expected to more than triple, actually nearly quadruple.
Yeah, nearly
That's
quadruple.
just over a decade.
Pretty significant growth.
Triple, almost quadruple. Okay, let's unpack that. What does that kind of explosive growth actually look like on the ground? Region by region, where's it happening fastest?
Well, the report clearly points to Asia-Pacific as the primary engine for this.
Asia Pacific. Oh,
You're absolutely right. That
Yeah.
region is truly standing out. It's the global growth engine for crypto.
right.
It boasts the highest projected growth rate globally. We're talking an impressive CAGR of 11.378%.
Over 11%. Wow.
Yeah. Its revenue started at nearly $700 million in 2021,
Okay.
and it's forecasted to surpass $1 billion by 2025, and then eventually reach over $2.5 billion by 2033.
2.5 billion just in Asia Pacific.
Just in APAC, yeah.
Yeah.
This isn't just growth, it's really a monumental shift in market dominance.
That feels like more than massive. It feels like a tectonic shift, like you said.
Yeah.
And within Asia Pacific, I mean, some countries are just accelerating phenomenally.
They really are.
Take India, for example, projected to soar from just 92 million in 2021
Yeah, relatively small start.
to over 370 million by 2033. What's driving that? I mean, India's got this astounding 12.312% CAGR. That's the highest individual country one mentioned in the whole report, right?
It is, yeah. That's a crucial question. And the report points to this kind of unique mix of factors in India.
Okay.
You've got a massive, young, and increasingly tech-savvy population.
Right, the demographics.
Yeah, rapidly increasing internet penetration and this burgeoning interest in digital assets. Even while the regulatory landscape is still, evolving,
Mm.
it really highlights how a large digitally native group can just supercharge adoption.
So it's demographics, tech access. Interesting. What about China? Often seen as a major player, but what do the numbers actually say?
Well, China maintains its lead within the region, even though it started from a higher base, right? Over 204 million back in 2021.
Okay.
It's projected to grow substantially to almost $760 million by 2033.
Still huge growth.
Oh, yeah, with a really robust CAGR, too,
Yeah.
11.587%.
Yeah.
It's maybe not quite as explosive in percentage terms as India from that lower base.
Right.
But China's sheer scale means its growth just contributes massively to the region's overall expansion.
Makes sense. And it's not just those two giants, is it? What's really striking is this consistent, strong growth across such a diverse set of economies there.
Exactly.
Countries like Japan, South Korea, Australia,
Yeah.
they're all looking to more than triple their crypto market revenue.
Yeah, it shows real mainstream adoption is happening.
Japan, for instance, expected to grow from 100 million in 2021 to over 336 million by 2033.
Mm-hmm.
And even smaller, innovative hubs like Singapore, incredible momentum, projected from 31 million to 117 million. That's a CAGR of 11.65%.
Yeah, Singapore punching above its weight there.
Right.
And you've also got Southeast Asia collectively
Right.
growing strongly, almost 12% CAGR. Taiwan, too, nearly 11%.
Okay, so if you're listening, think about this. What does this rapid growth across Asia Pacific, this widespread growth, what might that signify for, the global shift in economic power, or maybe just tech adoption trends?
It's a great point. If we connect it to the bigger picture, this isn't just about, economic power shifting east. It's also a clear signal of faster tech adoption.
Right.
And maybe a greater willingness to embrace new financial ideas in these regions. It certainly points to a future where these markets play an even more dominant role in the whole digital asset space.
Absolutely. Okay, so we've seen this explosive growth, particularly in Asia Pacific. It's crucial now we turn our attention to maybe the more established players.
Yeah.
What does the report say about regions like North America, where crypto is already, pretty deeply embedded? What does their continued growth tell us?
That's an excellent transition. North America's market, as you say, was already substantial, valued at just under $500 billion back in 2021. It's projected to grow to over $720 million by 2025.
Okay.
And reach an impressive $1.5 billion by 2033. So it maintains a really solid CAGR of 10.015%.
10%. So maybe not quite as high as Asia Pacific's overall rate.
Right.
But 10% in an already mature market, that's still incredibly significant, isn't it?
It really is. It shows continued momentum.
And predictably, I guess, the United States leads the charge there.
Yes. The U.S. dominates the region. Its revenue is projected from over $400 million in 2021
Right.
to nearly $1.25 billion by 2033.
$1.25 billion. But does the report shed any light on why? Is it just deepening existing adoption or new demographics, new use cases maybe, fueling this sustained growth in the U.S.?
That's a sharp observation. And what's particularly interesting in the report is that while the U.S. is the largest market by far, Canada and Mexico actually show slightly higher CAGRs.
Oh, really?
Yeah. Canada's projected from 48 million to over 165 million. That's a CAGR of 10.838%.
Higher than the U.S. rate.
Exactly. And Mexico from around 42 million up to almost 134 million, with a CAGR of 10.191%. So this suggests that while the U.S. market is, maybe maturing, other parts of North America are still seeing faster relative growth, maybe from newer adopters or perhaps different regulatory environments, fostering innovation slightly differently.
So it indicates there's still significant runway for expansion, even where crypto's already pretty well established.
Absolutely. It's not a saturated market by any means.
Fascinating. Okay, let's move across the Atlantic. Europe presents a diverse and intriguing growth landscape, doesn't it?
It really does.
The overall market here forecasted to grow from just over 400 million in 2021 to nearly 1.3 billion by 2033. So a healthy CGR there too, 10.24%.
Indeed. And within Europe, as you say, quite a bit of variance, which really highlights the nuances of global adoption.
How so? Well,
Germany, for example, shows really strong growth, projected from 96 million up to over 326 million.
Okay.
That's a healthy CGR of 10.854%, making it a key player.
Right.
The UK also set for solid growth, from about 55 million up to 185 million, also over 10% CAGR.
But then, as the report seems to indicate, you have countries like France growing, yes, but with a slightly lower CGR, right? Around 9.5%.
That's right. Projected from almost 44 million to 130 million. Still good growth, but a slightly slower pace.
And similar patterns in Italy and Spain, it looks like, around that high 9s, low 10% CAGR.
Yeah, exactly. Italy at 9.87%, Spain at 10.5%. So strong, but varied.
But then you get to the other end of the scale within Europe. Russia and Luxembourg. Comparatively lower CAGRs, down around 8.8% or so.
Yeah. Russia from 24 million to about 68 million. Luxembourg from 4 million to just over 11 million. Still growth, but noticeably slower.
So what could be driving these different paces across seemingly similar developed economies within Europe?
That's a critical point.
Yeah.
And the report hints at a few factors. This sort of patchwork growth across Europe is really telling.
Yeah.
It underscores how crypto adoption isn't just about economic development level. It's deeply intertwined with national regulatory stances.
Regulation.
The existing banking infrastructure, maybe even cultural openness to things like decentralized finance.
Right.
Some nations might have more supportive regulatory sandboxes or maybe a more tech-forward population generally. Others might just be more cautious. It really seems shaped by local conditions.
That makes perfect sense. Okay, let's broaden our scope even further now. Let's look at the truly global expansion. South America, the Middle East, Africa.
Right.
These regions might be starting from smaller bases, dollar-wise.
Definitely smaller bases.
But the report shows they are demonstrating incredibly robust growth rates, contributing significantly to that overall global picture we started with.
Absolutely. Take South America, for instance. Projected to grow from 128 million back in 2021
Okay.
to nearly $450 million by 2033. That's a strong CAGR of almost 11%, 10.993%.
Almost 11% for the whole region. Any standouts there?
Well, Brazil is a key player, growing significantly,
Yeah.
but Argentina actually stands out with an impressive CAGR of 11.541%.
Wow.
Yeah, rising from 23 million to 86 million. Colombia, Peru, Chile also contributing significantly to this regional surge, all showing KGRs over 10%.
Okay, impressive. And the Middle East, similar story.
Similar vigor, yeah. The market there growing from 96 million in 2021 to over 333 million by 2033. The overall CAGR is strong, 10.9%. And countries like the UAE are really leading the charge, projected from 15.5 million up to almost 58 million.
And the KGR for UAE.
Substantial, 11.6%. Turkey's also showing excellent growth, over 11.3% CAGR. Saudi Arabia is strong too, nearly 11%. Egypt, Qatar, all over 10% CAGR.
It's really broad-based growth then.
It is. And we certainly shouldn't overlook Africa, also demonstrating significant expansion.
Right. What are the numbers there?
Growing from just over 73 million in 2021 to over 253 million by 2033.
Okay.
That's a KGR of 10.318%. South Africa and Nigeria are highlighted as the largest contributors. South Africa actually showing a slightly stronger TAGR of 11%.
Over 11%.
Yeah, from about 26 million up towards 96 million. Nigeria also growing well over 10% TAGR.
What's fascinating here, then, is how truly global this growth is. It's not just concentrated in, the traditional tech hubs or the biggest economies.
Exactly. It's a testament, I think, to the widespread appeal and maybe the perceived potential utility of digital assets everywhere.
I thought I had a decent grasp on the crypto market, but seeing these numbers, especially for regions like South America, the Middle East, Africa, it really highlights how global and pervasive this shift actually feels. Were you surprised by the sort of robustness of growth in these regions given those smaller starting points?
Absolutely. I mean, what immediately strikes me is just the undeniable momentum. It's clearly building in these emerging economies.
Yeah.
It makes it clear that cryptocurrency isn't just some niche investment for, developed nations. It seems to be finding real utility, real adoption in very diverse economic landscapes.
Which indicates maybe a much broader, more fundamental shift.
Exactly. A shift in how people access and maybe use financial tools globally.
Okay, so to recap the big picture then, the data from cognitive market research provides, overwhelming evidence of rapid, widespread growth.
Undeniable.
In the global cryptocurrency market, we're talking about a projected increase from under $2 billion in 2021.
Yeah, that 1.88 billion starting point.
To over $6.3 billion by 2033. I mean, to put that $6.3 billion in perspective, that's roughly the annual GDP of a small European nation, right?
Yeah, or like you said earlier, enough to fund a whole slate of major movies. It's a significant number.
It signifies a profound financial transformation happening in just over a decade.
It does, and this deep dive, I think, really underlines the power of just looking at the numbers. It lets us cut through the daily headlines, the noise, and understand these complex trends beyond just speculation.
Yeah.
The consistent compound annual growth rates, those KGRs we talked about, across such diverse regions, they truly tell a powerful story of accelerating global adoption and maybe integration of digital assets.
It certainly does. And this leaves us and you, the listener, with a provocative final thought to consider.
Okay.
Given this consistent and significant growth, right, across such diverse economies, diverse regulatory environments, what fundamental shifts might be occurring in how the world perceives and actually uses digital assets beyond just investment?
That's the big question, isn't it?
Yeah. How might this sustained growth, particularly in those developing regions we looked at, how might that shape future financial systems? Or even just daily transactions for individuals in those areas?
It's a question that really invites us to look beyond the immediate market numbers, the valuations,
Right.
and consider the deeper, maybe longer-term implications of this whole digital revolution for economic empowerment, for global finance itself.
Exactly. Something powerful to mull on. Thanks for joining us for this deep dive into the numbers behind the crypto surge.
Thanks for having me.
We'll see you next time.
Welcome to the deep dive. We're jumping right into some fascinating source material you sent over. Our mission, like always, is to really pull out those key bits of knowledge and insight for you. Today, it's the cryptocurrency market. It's dynamic, sometimes confusing. Okay, let's unpack this. Let's really try and understand what's shaving it.
Yeah, it's a really interesting time for digital finance. So this deep dive, we'll be looking at the main drivers, what's pushing crypto forward, but also the big challenges, the hurdles it's facing, and then maybe the most exciting part, the future trends that are kind of reshaping things. What's fascinating here is just how quickly it's all evolving, really redefining finance.
Okay, so let's start there, the drivers. What's really propelling this market? I mean, the obvious one seems to be just the huge surge in digitalization, right?
Yeah.
And fintech adoption everywhere. Everything's moving online.
Exactly. That's foundational. And with that backdrop, cryptocurrencies emerge as this decentralized alternative, which is really appealing not just to the tech-savvy folks,
Right.
but also, crucially, for underbanked populations globally, it opens up access in a new way.
Access is a key word there. And building on that growth, what about the big money, institutional investors?
Yeah, that's been a profound shift. We're seeing much more serious participation. It's not just talk anymore. Major players, hedge funds, asset managers, they're actually allocating resources. And things like the Bitcoin ETFs, the futures markets, that adds a layer of legitimacy and liquidity, of course, which kind of connects it to the bigger picture of financial markets, makes it feel less fringe.
It normalizes it in a way, brings it into the fold for traditional capital. Okay, so that's one angle.
Yeah.
But then you have decentralized finance, DeFi. Here's where it gets really interesting, I think. It's not just about fitting into the old system, it's building something new, isn't it? How is it changing access to financial services like lending and borrowing?
It's completely reshaping it. DeFi aims to, well, cut out the traditional banks, the intermediaries. Trust is meant to be embedded in the code and the smart contracts. So you get this parallel system for things like lending, borrowing, staking. And theoretically, anyone with an internet connection can participate. It's permissionless. That's the real potential game changer there.
Oh, parallel system. Wow. And sticking with real-world uses, what about just sending money? Cross-border payments, remittances. How disruptive is crypto there?
Hugely disruptive, particularly compared to the old ways. Think about traditional remittances, they can take days, right? And the fees can be quite high. Crypto transactions, well, depending on the network, can settle in minutes, and often for, a fraction of the cost. This is a massive deal for people in, say, developing countries who rely on sending or receiving money internationally. It's faster, cheaper, more efficient. Which, this raises an important question. Just how integrated will these digital methods become in our everyday global finance? What does that mean for the old guard?
That speed and low cost for global transfers. Yeah, potentially revolutionary. Okay, but let's pivot. It's not all smooth sailing. For every innovation peak, there are challenges. What are the big roadblocks holding crypto back right now?
Well, I'd say a primary one has to be regulatory uncertainty. It's just messy. The rules are different everywhere you look. Different jurisdictions, different approaches. And then you get sudden government bans or new restrictions on mining or exchanges popping up. It creates a really unstable landscape for businesses and investors. Hard to plan, hard to build long-term confidence when the rules keep changing.
Yeah, that constant shifting makes it tough. And tied into that maybe is just the nature of the prices themselves. They're famously volatile, speculative. Why is that specific characteristic such a hurdle for, say, more traditional investors?
It really boils down to risk management and predictability. Traditional finance, especially institutions managing pensions or large funds, they need some level of stability. They model risk carefully. Crypto's wild swings, sometimes huge percentages in a day make that incredibly difficult. It's often seen less as a reliable financial instrument and more like a high-risk bet. Not quite a stable asset class yet for many.
Right. The predictability just isn't there in the same way. Okay, beyond market swings, what about security? That seems to come up constantly. hacks, scams.
Absolutely. Security is a critical concern. And what's fascinating here in a worrying way is how frequent these incidents are. We hear about exchange hacks, sophisticated phishing attempts, people losing funds from their wallets. And unlike traditional banking where you might have deposit insurance, in the crypto world, especially with some unregulated DeFi platforms, there's often no backstop, no central authority to appeal to, no way to recover lost funds easily. You're essentially your own bank. Which is empowering, yes, but also puts all the security burden on the user. That raises serious consumer protection issues.
You're your own bank with all the risks that entails.
Gotcha.
And then there's the environmental question. That's become a big one. Bitcoin specifically and other proof-of-work coins, they use a lot of energy. So what does this all mean? How does that impact perception, especially with ESG investing becoming so important?
It's a major hurdle, no doubt. That proof-of-work mechanism Bitcoin uses, it requires immense computing power, which translates directly into significant electricity consumption. We've all seen the comparisons. And that clashes head-on with environmental, social, and governance ESG principles. For many investors, especially institutions focused on sustainability, that energy footprint makes proof-of-work crypto a non-starter. It definitely fuels criticism and could, down the line, lead to tighter regulations or just a market preference for greener options.
Right, that ESG angle is becoming unavoidable. Okay, so those are some significant challenges: regulation, volatility, security, environment. But despite all that, the industry is evolving, isn't it? It's responding. So looking forward now, what are the key trends shaping crypto's future? What's giving it momentum?
Well, one major trend directly tackles that environmental point we just discussed. It's the shift towards more eco-friendly consensus mechanisms. Greener tech. Ethereum's move to proof of stake is the prime example everyone points to.
The merge, yeah.
Exactly. By replacing energy-guzzling mining with validators staking their own crypto,
The play answer?
they slashed their energy consumption dramatically, like by over 99% for that network. That's a huge deal for addressing the criticism and, frankly, for making the technology more palatable for wider adoption and investment.
That's a massive shift, addressing a core criticism head on. Very interesting. Okay, what else? What about governments? We hear a lot about central bank digital currencies, CBDCs. These are like regulated digital versions of dollars or euros, right? How might they change things? Could they affect the existing crypto market?
CBDCs are really fascinating. Yes, they're centralized, issued by the state, unlike Bitcoin or Ether, but their very development, their potential launch, it could actually normalize the whole idea of digital currency for the general public, build trust in the concept. So if we connect this to the bigger picture, while they might compete with private cryptocurrencies in some ways, they could also inadvertently pave the way for broader acceptance of digital assets overall. It shows even central banks see value in digital money technology. It's a major exploration by governments worldwide.
Interesting paradox there, competition potentially leading to broader acceptance. And speaking of tech evolution, what about AI? Artificial intelligence integrating with blockchain. How's that playing out?
Oh, that's a really powerful synergy taking shape. AI can analyze blockchain data much faster and more effectively than humans. So think about fraud detection. AI algorithms can spot suspicious patterns, anomalous transactions much more quickly. It can also help with scalability, maybe by optimizing network resources. And in trading, AI-powered bots can execute complex strategies automatically, reacting to markets instantly. It's essentially about making the underlying infrastructure smarter, more secure, and more efficient.
Using AI to enhance the core tech. Makes sense. Okay, and one last trend, stablecoins. They seem to be really gaining traction. These are the ones pegged to traditional assets like the dollar, so they don't have that wild volatility. What's driving their rise?
Stability is definitely the key appeal. They offer the benefits of crypto speed, low-cost transfers, programmability, but without the crazy price swings you see with Bitcoin or others. That makes them much more suitable for everyday things, like payments or remittances, or even just holding value within the crypto ecosystem without constant market risk. And we're seeing ongoing improvements in transparency around their reserves, better auditing, and clearer regulatory approaches. All of that is building trust and making them feel more, well, stable and usable for mainstream purposes. They kind of bridge the gap between old finance and new crypto.
Bridging the gap. That seems like a good way to put it. And that, I think, wraps up our deep dive into the really complex world of the cryptocurrency market. You provided some excellent source material, which let us really get into the drivers, the challenges, and those future trends.
Yeah, it's a space that just keeps moving so fast. And thinking about all this, It raises an important question, maybe for you to mull over after this. Beyond just the dollars and cents, how might this ongoing fusion of technologies, CBDCs, AI on blockchains, more robust stablecoins, how might it fundamentally reshape not just how we handle money, but maybe even core aspects of global society? Things like trust, identity, access. What might that look like in the next decade?